Good morning, traders. Welcome back to another pre-market watch list. As always, thank you guys again for joining in. So today, I think is going to be a pretty boring day. It might not be. It looks boring. And as always, it's usually the boring days that appear to be boring that I end up trading really well, ironically. So I'm being optimistic on the day, but yeah, it looks a little boring today. I will just come out right and say that right now. So good morning, Rick, David. Good morning, guys. We'll give it a few minutes here, a few seconds. I'll wait for some more cats to roll in. Good morning, guys. Yuri, Kevin, William, Matthew, Coco, Sam, Tom. Can't pronounce that. Ivan, Justin, Ahmad, Aaron, Jan. Good morning, guys. So, anyways, yeah, hopefully we're going to aim for a green day. Yesterday was just some really poor trading on my part. I will say it was a little bit fakey, but still could have done far better. Actually, basically everything I traded, it worked out. I wasn't patient. Again, I'm more of like a momentum. I like things to move fast, and when they don't move fast, I get a little on edge, and it makes me want to hop out. So, there's strengths and weaknesses, but again, more of my style is I like things to go like fast, right? And that's how I trade the best. Because I typically tend to trade with more or heavier shares. So when they're not moving fast, then it's like I got so many shares in a stock that's not moving, and it's just like nah. So anyways, yesterday, all in all, not a good day at all. Basically lost on every trade. I was in the green on a few of those ones, but end of the day, it doesn't really matter. So I did call Netflix. I was right about Netflix. Yes, sir. That was the breakout. So when I look back at Netflix, right, I was aiming for like a typical strength push on Netflix, right? Like a lot of times when Netflix it goes, right? It rips like 4 or 5 points in a candle, and then it'll pull back, and then it'll rip again, and then it'll pull back, and then it'll do like a steady run. But I think since Netflix had already bounced really strong a couple days ago, a lot of like the big buying pressure had already taken place, and now this was just kind of like the slow momentum grind. So I was looking for more of like a fast breakout on Netflix. That's what I was anticipating. So I was right about what was to happen, but I was wrong in anticipating what I thought was going to happen. Like I anticipated a fast move when in reality it was just going to be a slower grinder. It was super, super choppy all the way up. So all in all, I can already say, even if I like went smaller share size and let it ride, there's no way I would have made it all the way to would have made it all the way to 380. It was just way too wishy-washy on the way up. It'd go up, then it'd break the 9, break the 20, pop back up. Like there's no way with my style I would have capitalized much on that anyways. So it is what it is. But Mikey, that's awesome. Really? So there's 3 of you that work at NASDAQ, and there's 3 of you guys that watch my stream in the morning. That's freaking awesome, man. Thank you. Thank you guys, right? That's cool. Anyways, yeah, I never looked at NLST. Was that, hold on, let me just take a quick look real quick, because I know like someone was saying it ended up working out really well. Yeah, so for me, I never pay attention to stocks below $1. Though I think I might mention one today. I never mentioned stocks below $1, but I might mention one today. All right, so so let's get into it, right? Let's go to the next screen. All right, so there you go. I'm only watching 2 stocks today. I'm not a huge fan of much going on today. I do know that when things are slow, when they look slow, I tend to actually trade better on those days. Ironically, as I've stated before, don't know why, but I actually tend to do pretty well on the days that look slow pre-market. So we'll see how that pans out today. But really, it's going to be for me, Bed Bath & Beyond and Netflix. Maybe looking for some little continuation to the upside on Netflix. And then, I always keep eyes on other stocks. But as far as what's going to be like my main focus, it'll be Best Buy, or not Best Buy, but Bed Bath & Beyond and Netflix. Thanks, Mikey. Appreciate that, my man. I'm only looking at 2, so we'll go through the 2 stocks I'm looking at. and then we should have time to take a look at some other things. So let's go ahead and do that right now. All right, so let me get over to the next screen. So I'll wait another second. You guys can write these down, the few top gappers and down gappers, and then go from there. All right, and then I'll pop back to the screen a little bit later for anybody who tunes in a little later. So we'll start with we'll just start with Netflix actually. Let me get over to the screen. So we'll start here on Netflix. So as mentioned yesterday, we anticipated that Netflix was going to break out, and it did successfully. So that's kind of cool that worked out how we had anticipated. Let me close some of these things here. All right, so yeah, Netflix broke out yesterday. If you look at the 180-day chart, it becomes kind of evident that it was channeling up. And let me grab my drawing tools. So it becomes pretty evident that yesterday, you can see it, boom, 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 boom. We anticipated that break to the upside. So there might be some continuation to the upside on Netflix. So what we're going to look for is a continuation play, just looking for Netflix to continue grinding up. So since yesterday, I got faked out a little bit and it was really choppy. I don't think if I trade it today, I'm going to go with as big a share size. I'm probably going to go with maybe 50 to 100 shares, and then just kind of try and let it ease up and ride. Because I went 200 shares yesterday, was getting faked this way, faked that way. So if it does tend to be a little fakey today, at least I can protect, if I do get a loss, some of it by not going as heavy on the share size today. Something I do want to mention, right, is if we look at Netflix from its past earnings, so let me do a 1-year chart, right? So this is what we have to pay attention to, right, guys? Look at this. So on the last earnings, this was it right here. This was the last earnings for Netflix. You can see this big gap down. I don't want to call it a massive gap down, but it is pretty big because that's a gap down of like, what is that? Let me do my other thing here. That's a gap down of from 385 to it closed there. So really the gap was 398 to 385. So that's so about 11, maybe a $12 gap fill possibly. So the important thing to look for here is this. Look at these two lower candles right there and there. And then look at this candle right here. If we draw a line straight across, and then also note look right there. So we're focusing, so the main focus is this circle, which is the gap from the last earnings on Netflix. We're looking at this arrow that I'm hovering over. That is the kind of the end or potential start of the gap fill. And then we're focusing on these two areas, which drop down to the price of 380. And then this current candle from yesterday at 380. What does this all mean? Well, I'll show you. If you just draw a line straight across through there, that's a strong resistance point. If Netflix can grind up today, and if it can break over, excuse me, if it can get up to and break over kind of 385, we could see a potential gap fill where the stock might just go like this, right? If this can grind up, we might get what we call just a gap fill, and we might get it to shoot all the way up to about there, right? We might see about another $10, $12 move on Netflix. I think that would be, I think it's possible. I think that's a respectable thing we could see on a big name stock like this, reputable company. Sure, it went up yesterday 10 points, but really, 10 points for Netflix that's not like that crazy, right? We've seen Netflix rip $15, $20 in a day. Hell, on Netflix's earnings, we've seen it bounce $80, or 60, about 65 on the last earnings. So it's possible, right? It's not a far-fetched statement at all. And the fact that we kind of just channeled up and started breaking out, I think a gap fill up to like what was it saying? Up to 398 is possible, close to 400. So I'm going to watch it. I might take smaller share size on it because clearly yesterday I wasn't able to do my job correctly. So might try and just be easy today, right? Rather win than lose, or I'd rather lose small than lose big. So you guys are going to have the game plan there for Netflix. Next one is BBBY, which is Bed Bath & Beyond. So Bed Bath & Beyond had their earnings report today. As you can see, it's gapping down. I get a few levels already marked off. So, I want to be short bias on Bed Bath & Beyond, but it's kind of hard for me to be short bias because at least right now, or like at least at market open, it's hard for me to want to be short bias considering it's already gapped down so much, right? It's already down, okay? At this point, since it's already down, you're shorting the low, right? The term buy low, sell high, that is in reference to buying and hoping it goes higher. Well, in terms of shorting, it's the opposite. We want to short high, buy back low, or we want to sell high, buy low. For some of you that are just newer to trading, that might be a little confusing to you, right? So it's hard for me to want to short Bed Bath & Beyond at these current levels, okay? So for those of you that have followed me for a long time, you know exactly what I'm about to say here. What we would like to see, not that it's going to happen, but what we would like to see is we'd like to see Bed Bath & Beyond open up, squeeze, up to maybe 1625, or squeeze above that up towards 1650, and then start rolling back down. If for whatever reason, okay, if Bed Bath & Beyond, put it this way, if Bed Bath & Beyond squeezes up to 1625 and it doesn't come down, if it squeezes up to 1650 and then does not crash, it's probably going to turn into a long play today that runs up towards 17, maybe 1725, and then it'll have a late day rollover like this, and then who knows what it does from there. Because, you know, this is our typical go-to move on gap downs, right? We look for them to squeeze up, hit a rejection point, and then fall right back down. And if they fail to do that, they're usually turn into a long play, or they keep pushing higher because we all try to short it, and then if it doesn't go down, we end up squeezing out again, and then it just pops even higher. So I think that I don't think Best Buy, or not Best Buy, I don't think BBY is going to, or Bed Bath & Beyond is going to be a short out of the gates. I see this as the PVTL. If some of you might remember from back maybe like 2 or 3 weeks ago, I don't know, I had like a pretty big day on the stock PVTL. I made like maybe $3,200, right? And it was similar to this, where I said, you know, it's gapped down a lot. It's on a support level. I don't see it as a short. You know, I think a lot of people are going to try and short it, but I don't think it is a short. And sure enough, it wasn't. And I ended up longing it basically right out of the gates, and it just went up and up and up and up. Shorts try to short it down again and kept going up and up and up. So I kind of see it the same. The only difference between PVTL and this stock is PVTL, when it was on its earnings play and it gapped down into a major support level. So like when PVTL, I traded it, let's put it this way. So there's 2 earnings, right, on PVTL. The first earnings, it gapped up, let's say $4, right? And then we traded. And then a couple months later, they had their next earnings report and they gapped down $4. So they gapped up $4, they gapped down $4. So it basically was like a wash. It was break even right on this major support. So in that sense, you know, I didn't see it as a short play, but this one's a little different. So I'm not going to compare them 100% the same, because here's the difference, right? If we look at the yearly chart on Bed Bath & Beyond, Bed Bath & Beyond has, let me go back to the 1 minute chart. 1546 is a low. We're at 1557. So if you look at the, yearly chart on BBBY, we've already broken the 52-week low, right? So if you wanted to go and find additional support, you'd have to at least go to like a 2 or a 3 year chart. So if I look back at a 3-year chart, there is no support, right? There's nothing on a 3-year chart. So you'd have to go even farther, maybe we'll just go 15 years. So if I look back to 15 years, we're still below the 15-year low at $16.23. So it's like, in your mind, you got to think, is it just possible that BBBY got oversold today on earnings and is actually getting ready for a big bounce? Or is it the fact that BBBY really isn't doing all that great and they're going to start trending even lower? So it's really hard to say at these levels, considering we broke support. So another thing that I'd recommend doing is doing this. Drawing out the support line at 16, do like 1625, 1630, right? Do a support line at about 1625, 1630. And this is also another scenario that if BBY breaks to the upside, this 1620, well, that ended up being 1660. I apologize. It should be 1630s area, 1620, 16. Yeah, it's already marked off. It is already marked off. So here's another thing to look at. So let me go back to this this yearly chart. It's right there. That doesn't. Maybe I have to go to the 3-year chart. Was that it? 16. I don't know. Anyways, yeah. So back to what I was saying. The 1630, 1625. That should be a pretty good rejection point. If this thing wants to pop up and come down, 1625 is going to be the spot. We might break over it a little bit, then come down, but that would be, I think, the spot to watch for to enter a short. There might be a long play up to it. If it breaks over, I think we could see it run even more. So a lot of possibilities. You just got to follow it. All right. So that's all I got for you on BBBY. All right. All right, now that I've gone over all those, I'll take a second here. I know some good ones to talk about will probably be ACHV. I'll talk about the penny stock ACHV because I know it's going to be pretty popular in terms of, people watching it because it's the major penny stock that's gapping up. So I'm not actively it's not my main, but I am going to follow it today. So what I did with our private group was I basically told them, be a little careful on it because it seems that the past couple times, ready? I'll show you. The past couple times here, here, those are 2 times, 1 and 2. Both times these gapped up pre-market, they ended up dropping right out of the gate. So they did have a gap up pre-market, and then they just crashed right at market open, basically. Next one over, I think there's another one here. Let me scroll a little bit. No, there's not. So yeah, both times, the last 2 times ACHV gapped up pre-market, it ended up crashing right out of the gate. So based on history, it's a little bit scary, but I could say that the difference between, but that one was also gapping up into a gap fill. That's arguable. This one was gapping up straight into resistance. So that would make sense. Now this one is gapping. So this one, I would say, let me zoom out a little bit here, do a deeper analysis. So this one, yeah, I could see ACHV having a little bit of room to run up to $4. If it can break $4, then we might get a good push. But I could see ACHV as a long, but do be careful just because past 2 times we gapped up pre-market, it did end up crashing. It didn't really do a whole lot. But I think there might be some room for something. It is good that it's gapped up like this and it's pulled back because this can lead to a run like this. Okay, so could be something there in ACHV. They already did have a bad earnings day, Alberto. Apple, I'll talk about AMD and I'll talk about Apple real quick. And so let me talk about Apple. So Apple's trending up here this morning. I didn't look at the news. What's the news? I got a major upgrade. Apple upgrade. It doesn't surprise me. Like I said, right? Apple is in everybody's pocket these days. Most. We still have Android. I'm an Android user, but Apple's basically everywhere, right? So it's not surprising, honestly. You have enough knuckleheads to go out and buy their new phone that hasn't even changed, right? So there's enough people out there that are just love to waste their money on their products. I'm only saying that because I'm an Android user, so we won't get into the whole spiel. But it is true, right? If you realistically think about phones, and it's so pointless, right? You buy the new phone for what? A bigger screen, a little bit better display. It's honestly, where we're at in our current level in time, we don't have to advance anymore, really. Phones don't have to get any better. They are as good as they need to be, right? But they have to think of something in order to continue selling you on. But at the current moment in our world, we are completely fine not advancing anymore in technology as far as phones go. We're well beyond where we even need to be for a telephone, okay? But again, people will continue to buy them, and they will continue to buy them. So until people realize that they're really not worth buying the new ones, Apple will keep going up. But then, and then they have sell computers, right, and like Apple TV and all that other crazy stuff. So again, right, I mean, they'll probably hit 272. I wouldn't be surprised. Now, since Apple's dip though, since we had that dip, right, boom, and it dropped down, we kind of double bottomed a little bit there. I actually have 3 kind of bottoms. So yeah, you can see Apple being bullish today. I would keep Apple on watch for a long. Something to note here, look at Facebook too. Maybe watch Facebook for a long. Like I said, it's kind of curling up. I would watch Facebook possibly long. Tesla, I'm really not crazy about Tesla unless it's starting to do something different. Again, you guys know my output on Tesla. In terms of trading it, I love trading Tesla. But in terms of like investing and like Tesla's just, I mean, dude, it's just, I cannot, I mean, for some, I can see where you're going with the value on Tesla. I can see where your belief is at. But in terms of where I'm at, it's just like the dumbest thing, right? For me, at least. In terms of like, at least their cars, and they're just not it, right? Back in the day, like Tesla could have been that, like the something, right? But now, all the other car companies, they're all catching up, right? Like they're already at they're very close, if not even the same level as Tesla. Like Audi's on it, like all the other car companies, they're very close. I'll still say that Tesla's a little bit ahead of the game. The cool thing about Tesla is when they started doing the electric cars, the thing with electric cars is they didn't know how to get them to go fast enough. They didn't know how to get them to go long enough. They didn't know how to make an electric car with all those components and still make it a cool looking car. Tesla was able to do that. But they've never been able to get past that level. And now you have all the other car companies all basically on the same playing field. They're getting the distance, they're getting the speed, and they're getting the look. All right, Tesla's losing that edge, right? They don't really have that competitive edge, nor do they have profitability, nor can they seem to stay out of the news, right? So there's a lot of problems still. And so as far as investing goes, I can't do it. There's no way. In terms of trading, bring it on, dude. Tesla can rip 20 points in a day, right? Tesla can rip $7 in a candle. So sure, I'll trade it. But investing, I'll just pick something else, right? But I can say this. In terms of Tesla today, we did look at it earlier. What you want to pay attention to is like the 400, or not the 400, sorry, 320 level, right? So you see this breakout here at 320. You see this resistance here at 320. You see the resistance here at 320. So right now, this 320 level is your key mark to pay attention to. If it pops to 320, you're going to want to watch out because it might get stuffed. If it can break over 320, it's going to squeeze out a lot of long-term short sellers, right? You got to think that I'm gonna draw the word short in red. So give me a second. I'm gonna draw the word short in red, and I'm gonna show you where short sellers are going to be at. So this is going to be shorts. Okay. And then this yellow line I'm going to draw is going to mark where all these long-term shorts have been in since. So long-term shorts have been in since here, there, and like right there. There's been some there. There's been some there. But all these guys right here that I'm going to circle in blue, chances are if they're swing traders that do short selling, these short sellers probably are like already out. These ones here that I'm circling in blue, those shorts already got squeezed. So right now, if we could get over 320, you're hoping for these two yellow arrows that I just circled. You're hoping for them to get squeezed. And then you could see a nice pop on Tesla. So I'd say right now there's you have these guys to worry about, right? These shorts are what are going to start getting nervous right now. Those guys that added around 320 that might still be holding, they're getting a little nervous because it's approaching that 320 level. Okay. And then lastly, I'll talk about, no, I'm not even gonna do it. We don't have the time here. Or maybe I will. I'll talk about AMD real fast. So what AMD pulled back pretty hard overnight. Remember what I said yesterday's stream to watch, because if you looked at the 100, oh, that's bad. Hold on, go back to the 180 day. Remember how I was saying you could watch because this could be a double top pattern. So it's so far acting like one, but until it breaks down, again, let me put it this way. Until AMD actually breaks down the $30.72 level, it's not a double top pattern. It starts as a potential, but until it breaks down, so like look at this way. Let me put it this way. I'm going to draw a double top pattern. It looks like an M, right? So this red arrow signals the start of a potential double top, right? And then this green line that I'm going to draw here, this would mark when it becomes a real double top pattern. Full pattern is when this comes down and it breaks the green line. Once it breaks the green line, it most likely will drop down all the way to this previous level. And at that point, it completes the full M, and then it was, in fact, a double pattern or double top. Yes. Okay. But if it doesn't, right, if it goes like this and then it starts and then it comes down, but it doesn't break, right? Remember I said it doesn't break that green line. If it doesn't break the green line, then you can get something like this where it starts to channel back and forth. And then that might lead into a bullish pennant or something like that, and then push even higher or break down later. Okay. So in terms of AMD, I'm not really going to trade it right now. I don't care for it. I'm still up on the year on AMD, but again, it's without like crazy volume AMD, to me, it sucks because again, high frequency trading computers trade it like crazy. So it's literally just a super annoying stock, super annoying. In my personal, with the way I trade, heavy share size, getting in and out. There's too many high frequency trading computers in it that, you know, it just sucks, right? And to be honest, there shouldn't be high frequency trading computers should be banned. They should be illegal. They shouldn't even be allowed to participate in markets, right? That's my personal. They shouldn't be able to, you know. Unless you're going to give it to the public, right? You know, but you're saying like you could own it, but yeah, they cost millions of dollars. So unless you're going to allow the public to use high frequency trading computers, then it shouldn't be allowed to be on the market because the market is a place to lose money and make money. But it's like this, dude, who wants to go to war? Like, would you want to go to war with someone who has nukes and tanks and all you have is like a fork? No, it's not even realistic and it's not even fair. Right. And then again, the world doesn't have to be fair. I live by that for sure. But at the end of the day, I mean, it's just bullshit. I mean, come on. Realistically, there shouldn't be high frequency trading computers. That's garbage. All right. That's garbage. Anyways, because it takes away, you know, it takes away from investors like us. And again, you know, it's always the big guys that win and it's the little guys that get hurt. It always is, and it always will be. And all we can do is preach and hope someone hears our voice every once in a while and says, you know what, I like you, right? That's all we can really hope for. But again, high frequency trading machines, they should be banned. They're pieces of shit, in my opinion, and they can go blow up. They can just take their CPUs and they can just, right? So, anyways. All right, ladies and gentlemen, that's all I have for you here today on the pre-market watch list. So hopefully that helps some of you guys. Right? You know, the market isn't meant to be run by computer. Like it's garbage. Right? It's garbage. You know? So right, and that's the thing. It's like that's it. The high frequency traders, they front run high frequency trading computers, they front run us traders too. It happens all the time. I know it does, even to me, right? There's no way around it. As soon as you hit buy, high frequency trading computer sees it, grabs shares, sells them to you, and makes like pennies on the dollar, really small incremental amounts, but over millions of transactions a day. And over the years, that makes so much money. It's like, okay, here, how about this? Give me a high frequency trading computer. You guys just do regular trading, and then we'll switch off for a year. How about that? Oh, well, no, they want to do that because then that's not fair to them, right? It's like, get out of here, right? Anyways, that's all I have for you guys today. Thank you guys once again for tuning in. I will see you guys all tomorrow morning and for hopefully a recap video here today. Have a good day. All right, guys, so take care, and I will see you guys all shortly. And please do hit the like button before you head out the door, and I'll see you guys all tomorrow.